Let me tell you a short Canadian story. A few years back, there was a power outage in Ontario. In the small Canadian city of Kingston, it lasted a few days longer, and during the no power days, no one could use credit cards or payment by cell phone. How to pay them when you ran out of cash? Well, one convenience store in Kingston stayed open. People came in and got what they needed off the shelves and left a signed personal IOU note. The notes piled up, and when the power outage was over, everyone paid off their notes. Now, why am I telling you this charming story? Because the world is not a small town in Ontario, Canada, and the US certainly isn't one. Now, what about power outages? Am I hinting at that? No, something worse, maybe. Like what? Well, first of all, it's not me who is forecasting, but informers I am talking to. And my best US informers are forecasting riots before the elections, as I told you before. Also, power outages and general stoppages, some of them big, like cyber problems. What kind of cyber problems? Well, like the CrowdStrike software issue that caused service stops in half the world airlines and online services and some brokered services. In fact, during last month's market gyrations, some of the biggest online brokers, like Schwab, couldn't be reached. Can you imagine if you want to buy at the bottom but your broker can't do it? Or worse, you want to sell when you think there's a top and you are proven right and your broker couldn't tell your click. So what am I leading to? To this. Assume it's a few days before the US election, say the end of October, and the orange man seems to be winning Wisconsin's, which he needs to win the presidency. Now, do you think he'll be allowed to? And then he would fire so many honest government clerks and investigate the CIA and FBI and have a federal grand jury look into the January 6th. Probably not. But how can they stop him? I mean, they already tried to clip his ear with a bullet, allegedly, but this only made him stronger. And they tried to sue him and prosecute him, allegedly, and more, but nothing seems to stick. So what's next? How about a new virus? The one in 2020 allegedly worked against the orange man, so maybe a new virus can keep his people at home again? Probably won't work though. The orange man told his cultists not to comply. So how about riots, like BLM only wider? Or cyber attacks, like CrowdStrikes only bigger? Or internet interruptions, like the one we just saw? Or how about all of the above at once combined? Or is it all just tinfoil head stuff? Well, my informers say maybe yes, maybe no. So again, why am I mentioning this? How does this matter to your wishes to make money in the market, which, after all, is why you're watching this clip? Because before worrying about making money in the market, you should worry about keeping the money you already have. Or as an old GSB professor of mine used to say, return of capital comes before return on capital. And this, yes, is especially relevant today because an alarmingly large part of the trading population today all do it via the internet without knowing what they are doing. Want a proof? Here is one. Very few of those in the market today have ever talked to a single company in whose stock they invest. They haven't spoken to a single customer of NVIDIA, US Steel, or IBM, or to a single salesperson. Never met an executive, never chatted with the employees, nor seen their products. Yet they all happily click on the screen to buy $50,000 worth of the stock. And what is that stock? A blip on the screen, that's what. Just as is their money in the bank, as well as yours, blips. But it gets worse. Maybe only 1% of those who invest have ever met a single employee of their broker. You know, the voice behind the screen that contains their money blips? Yours too. Now imagine that it's a day before the elections in which Trump as much as promised to prosecute 51 of the hush-hush service people for treason. Now, I am making no forecast, but let's speculate. What if the market crashes, say 15, 20% down a day before the elections, then 10, 15% more on election day? And then the internet breaks down on election day, so you don't even know where the market is. Like the CrowdStrike kerfuffle, or some new cyber virus, or whatever. And also riots, yes. So on election day, if you are a US citizen, before you go to vote, you call your brokers to complain, and you are put on hold. and hold and hold. Does the market move in the meantime? Maybe it does, maybe it doesn't, because how do you know? There's no internet. But then, hooray, the internet comes back, but only for an hour or so, maybe. How would you spend this hour? Would you use it to pay your bills or sell your plunging stocks? Or maybe go to vote in person and stand in line if you're an American. Or would you just sit back and relax and say, nah, I just hold on to my plunging stocks for 10 years, as Uncle Warren Buffett tells me to do? Or would you start to be a little itsy bits freaking out? Or would you go to vote if you're an American? Or buy and sell stocks? Which? What I'm getting at is don't take for granted the fact that the market will always be there for you to buy and sell. And don't take the internet for granted. And why is this relevant? Because in the coming months, huge chunks of the ruling classes in the US may be facing what they see as a political extinction. As cult members, as they see it, who don't listen to the rulers anymore, listen only to a hypnotizing magnetic orange man with a clipped ear. What do you think the rulers would do? Or rather, what wouldn't they do? Which is why I would suggest that even though I see the market jetting up here at 5,500 on the S&P to around 7,000, or up 30% from here, the last 500 or 700 S&P points may take place in a wild jungle of natural and unnatural disasters that may prevent you from selling. And this may be especially true if you are then caught, like everybody else, in the euphoria, like most other lemmings, and your sense of FOMO, fear of missing out, prevent you from selling anyway. To get to the point, I think it might be a good idea to consider selling before the 7 grand or 7.5 grand top on the S&P into the market rocket climb, climbing on the wings of Janet Yellen's massive T-bond printing. As JP Morgan used to say a century ago, always leave the last 20% of gain to the suckers. Well, 20% of 7 grand is a bit too rich for me. But for me, 10, 12, 50% is okay. Let the last lemmings have it. Ah, yes, the lemmings. If you recall, in October, 1.5 years ago, when the S&P was at 3,800 and everyone panicked, I told you not to be a lemming and not to sell. This was 45% ago, yes? But now it is almost the opposite. I said almost. Now I suggest that you should consider being one of the early lemmings, but not yet. No. Here everyone is still a bit panicky, probably even you. After all, the fear and greed index was at 19 a month or two ago, which was close to the level of COVID bottom. Then the fear and greed index rose to 33, and now is at 45, neutral at best. So what am I saying? I'd say that I'd wait for the fear and greed index to run above 85, hopefully above 90, which is where it was in December 2019, pre-COVID, just before the market plunge. The S&P would then be probably between 6,500 and 7,000. Then I'd consider selling everything. Yes, you heard me right. Every fiddling thing, except US T-bonds and US cash. How would you know when to sell? After all, you can't just listen to mopes like me who are mere blips on your screen. And for all you know, all this could happen after the election, or I could be wrong. The surest sign, I would suggest, is that you yourself will probably be euphoric at the time, as will be your cab driver, your barber, and the cashiers at your local liquor store. In other words, be the third lemming to sell. Now, why not be the first lemming or the second? Why the third? Because the second lemming position has been taken already by Warren Buffett, who has been selling. Just like last month, he sold half of his Apple position, 75 billion worth. But remember, he sold only half of it. Hasn't sold the other half yet. As for the first lemming, this was probably Jeremy Grantham of GMO, who sold at S&P 3000, which was taking JP Morgan rule of selling to sold to extreme. Anyway, I'd suggest you wait for the S&P mid to high sixes and sell, keeping only one of two of your surefire multi-baggers that can rise 50 times or more in the next 5 years. Like which ones? Go listen to my previous clips. I mentioned a few. 3 of them already tripled. The last one merely doubled. That live person, LPSN. Go look it up. And what will I do when I go into cash and T-bonds and keep my 2 multi-baggers? Why, I'll go write another book. Which one? I'll tell you all about it in the future. That's all for now. Please let me know what you think of the above. Give it a like, subscribe to the channel, then retweet to all your subscribers and followers so they subscribe too. then buy my books, The Sleuth Investor and The Advanced Sleuth Investor, and you can buy the thrillers too, and give them all a review on Amazon, which I hope will be a good one. I'll see you next time, and meantime, thank you very much for watching.